Is the turnaround here to stay? Our senior markets commentator, Mike Santoli, is with us to kick off the hour. Mike, there was some commentary over the weekend that both value and growth could coexist, and I know you sort of referenced that a little bit yesterday. Is today further proof that that can happen?
It could. I mean, I've been maybe for a week been saying that we don't have to always be in this market where it's either bet red or bet black. I mean, I think Monday was almost a caricature of that kind of day with the divergence you had between the Dow and the Nasdaq. So far, I do think that the market is making the case that it might be a little bit less binary. Yesterday's recovery or bounce in the Nasdaq was kind of the most forceful version of a relief rally from a deeply oversold condition that you might have. It doesn't mean it's all over. It doesn't mean it's going to be persuasive that it's back to leadership because you really still are only regaining a few days worth of losses. But you can argue that we have a more rebalanced market because some of the hottest areas really have been humbled. If you look at cloud stocks, even semis were down 20% from high to low, and a lot of the concept stocks definitely took their punishment. So you don't have that kind of froth. You've reset expectations and sentiment to a degree, but I guess we have to be aware that this all happens kind of at the will of the bond market, at least for the short term. People are very twitchy in looking at the Treasury yields, and of course the reaction to today's pretty benign inflation numbers showed you that people were clenched up in advance of something like that and what it could mean for the growth stocks.
Yeah, I was going to ask you, as we look at the eco data today, David and Leslie and I were talking this morning about some of the GDP forecasts for the year, 5.6, 6.5, the engine for global growth, and then you get core CPI 1/10 away from a goose egg. I mean, that's the kind of setup, if you're a bull, that you would take, right?
Without a doubt. I mean, the top line of the economy is going to grow faster than we have seen in decades. That seems pretty much a lock. And yes, statistically, everybody realizes what's happening in the next couple of months, couple of quarters, where you're going to have some lift to reported inflation numbers. The question is, do you panic about that? Do we take to heart the idea from Chair Powell and everybody else that this should be really a fleeting phase when we have this inflationary burst? It seems like that's the way the market is set up. I think it's fair to say there's not been a lot of give in any of the cyclical sectors. The credit markets remain, really in good shape. So nobody's really saying that there's a macro stress issue to worry about here. It's really much more about what is the market already priced in. The market seems way ahead of the analysts right now in terms of what earnings forecasts are looking like and how that plays out through the rest of the year.
Yeah, Mike, I realize it's not an either-or scenario, and we were talking about this a little bit yesterday, but, I mean, just if you look at a chart of the past 3 months of Tesla versus ExxonMobil, I mean, it's been an incredible reversal.
Yeah.
And the two are moving in opposite directions, but Exxon is the one that's been outperforming as of late. And I do wonder if it does call into question that sort of more, traditional definition about momentum and whether the rotation is changing that.
Well, yes. I mean, I think that what you're seeing is value is morphed into momentum. Cyclicals have morphed into momentum, and you've kind of lost a little bit of, digital stocks being the ones that are always kind of running the show in terms of being at the leading edge of performance and momentum. That's going to shift. It's going to turn around. I think a lot of it had to do with just how neglected and under-owned things like energy and materials. I mean, look at the paper stocks we never talk about, but they're in a massive uptrend. So I don't know if this is just a mean reversion phase. Yesterday's action in Tesla. I mean, I almost don't know if you're bullish to see Tesla go up $100 billion in market cap in a day. It just seems a little bit too erratic for the overall market as well. And by the way, the average range in the S&P, even as we hover near the highs, has been almost 2% high to low for several days right now. So it seems like we're kind of very twitchy in general, but yet not a lot of net damage except in some pockets of tech.
Shepard Smith here. Thanks for watching CNBC on YouTube.